everybody running into gold. Silver had a super shoot, and now it's slightly more fatigued. After it slammed down, it had a better part of a $16 slam down from 117.6 down to 101. There'll be a couple of rattled faces, but it will come good, and it will overperform on the gold-silver ratio in the end, and it is a monetary metal, and it is trading up, and it's in a HVF upside. 5,000 today, 10,000 9 months time, 15,000, 20,000, 45,000, 50,000, who knows, maybe hundreds of thousands. Gold.
It's silver. Gun to my head, and I think it's reasonable estimate. We're not just going to see 200 silver. We're more likely to see something like 300 to 500 silver, and probably by summer. During that time, maybe gold only goes up to 8,500, which is to say, does what it did twice before, another eightfold move. I'm really not arguing that's where it's going to stop, by the way. But even if it just did that, and silver said, hey, I'm going back to 3 to 6% of gold.
Gold and silver markets are entering a highly volatile but potentially explosive phase. As Francis Hunt notes, silver recently experienced a sharp pullback after an aggressive surge, shaking out weak hands before its next move. Despite short-term fatigue, silver remains a monetary metal positioned to outperform gold as the gold-silver ratio compresses. Veteran analyst Michael Oliver has also emphasized that upside momentum remains intact across precious metals. With gold targets ranging from 10,000 to far higher over time, silver could realistically reach 300 to 500 if it returns to historic ratios. These price movements reflect accelerating demand for real assets amid global monetary instability. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
5,000 today, 10,000 9 months time, 15,000, 20,000, 45,000, 50,000, who knows, maybe hundreds of thousands. Gold. You don't understand the scale of quadrillion, trillion, derivatives, fiat, and debt. You don't know how much they've actually already stolen from you to drive skunk works, dark state, everything. You don't know that there's many trillionaires already out there. There's probably somebody indirectly owning so much stuff they might even be well on the way to, quadrillionaires, if you count the entire families at the very top and all their holdings and assets. It doesn't matter. You don't know. No, Bill Gates is not the rich guy. Elon Musk is not the richest guy in the world. They front men for people whose money they own. When JP Morgan died, they realized that he had just a minority of stake in the bank. Okay, this is where you're at. That is gold. This is why you hold. You hold, you hold, you watch them squirm. Everything they do will be designed to try to take you out of this trade. Let's look at silver and then we can close. Remember, you can book a call. We have increased our availability. We've opened the diaries. Be respectful. Please show up. Otherwise, don't do that. It is not salesmen. We don't employ salesmen. These are long-standing, trusted community members that give you the opportunity to buy if it feels right. We don't have to do anything. This is silver. Are you in an upside HVF at the moment? This is the question. Getting a little bit of a coming back down at the moment from this because silver had its volatility period here. This was kind of volatile. That would have shaken a few people. Industrial demand is still going to be big. It's still going to run. But right now it needs gold, the king. So as the dollar starts falling, this is banker buying, central banker buying. They buy gold. They buy gold. That's why you're getting a little bit of reset to the gold-silver ratio in a rally. You're going to go through this phase many, many times. Generally, the gold-silver ratio is going to go down. Bankers, when you are having dollar events, are going to buy gold. They don't have the vault sizes for the amount of money they've got to hide in vaults for silver. They might have some. And they could build big enough ones, but it's much bigger. It's not as dense in value, which is why I think platinum plays a role. It's being under-recognized a little bit now, but gold is right now. Dollar collapse, gold. Because the people who have the money who will be chasing into safety are not you, retail. But you can keep buying silver because it will win in the end. It might even be an opportunity right now, but it is a little bit spiller, a little bit thriller spiller there, tiny bit retrace. Let's go and check who we're going to check. We're going to say platinum. Platinum's been under in this little period now. A little bit underwhelming. You'll see that it's here. Now you get a lot of value, a lot of scarcity in a place. This will form a rounded bottom, and this will then play catch up suddenly. It's done that many times. It's sometimes it's kind of unhooks They're all, I refer to the Land Rover pulling up the trailer, which is silver, on the bungee cord with silver. We're stretching the cord again because gold is now the motor and driving because of dollar death. Then you're building up that potential energy in the trailer, and then it shoots past again with acceleration. Platinum is occasionally hitched, and sometimes it just goes a little bit, walkabout. It's like a prodigal son that goes on long tours and then shows up every now and then surges.
Gold and silver markets are flashing extreme signals as global debt, derivatives, and fiat excess reach unprecedented scale. With gold targets ranging from 5,000 to potentially far higher, the move reflects not speculation, but systemic stress and accelerating dollar weakness. Central banks are aggressively buying gold during currency events, while silver remains volatile but positioned to outperform as the gold-silver ratio compresses. Industrial demand continues to support silver, even as short-term pullbacks shake weak hands. Platinum, often overlooked, shows signs of long-term scarcity and catch-up potential. As monetary confidence erodes, gold leads, silver follows, and real assets reassert their role as true stores of value. Let's get back to the interview.
Humankind has, for 3,000 years. And right now it is very cheap. Ounce of silver respect to an ounce of gold. It's like 2%, right? Early this year, silver was like 1% of the price of gold. So it's had a huge move. When you go from 1 to 2, that's a doubling. Okay. So it's definitely caught up, but it's old reality when you measure that ounce of silver versus the mama metal, the monetary metal. Back in the 79 to 80 bull market, when silver, again, in that box, $50 peak, ran up to $50 and it was 6.5% of the price of gold. In fact, it stayed up there a while too. For a couple of years, it was in that 6 zone. Then in the 2011 bull market, when we went from like 10, $15 up to 50, took a couple of years, a lot of it in the last couple quarters of that move, just like in 79, 80, silver reached a relative peak to gold of 3.1%. Okay. So even right now at 2.1%, we're still cheap. So if price broke out of its confinement range of a half century, consider the possibility that silver could reassert itself as the baby monetary metal and get maybe back up to the highs it saw in the last 50 years, which say 6+%, 3+%. Wow. I mean, and consider also the fact that it's not going to do that with gold going down and silver going up. They're both going to be going up. Silver's going to be going up more. So good grief. I mean, if silver were 3% of even current gold, you'd be like $150. But if gold goes on up, I've speculated on this before. It's just a truth. It's not a projection, actually. The 2 prior bull markets in gold were 8-fold dimension. Bear low to bull high, bear low to bull high. If you measured the dimension, the logarithmic scale, it was an 8-fold gain. Well, heck, if we do an 8-fold, gold's going to be $8,500. And now if silver's 3% of that, ooh boy. Or what about if it's 6% of that? You get my point. Okay. This game is only beginning. So everybody thinks, oh my God, I gotta take the profits. And I understand, because if you've been in silver for even just the last 3, 4, 6 months, or you're making so much money so quickly that you can't believe it. And you think, I got to grab my money and run. It's silver, gun to my head, and I think it's reasonable estimate. We're not just going to see 200 silver. We're more likely to see something like 300 to 500 silver, and probably by summer. Now, during that time, maybe gold only goes up to 8,500, which is to say, does what it did twice before, another 8-fold move. I'm really not arguing that's where it's going to stop, by the way. But even if it just did that, and silver said, hey, I'm going back to 3 to 6% of gold, the real death of the dollar, not the dollar versus other currencies, but just the dollar in terms of its real value. They break out. Copper did this in 2005, late 2005 through about mid-2006. It quadrupled in a couple quarters. It lived in a range from 50 cents to $1.50 for like 30, 40 years. And when it broke out, in literally a couple quarters, it quadrupled in price. No specific event for copper caused, and it wasn't common to all the base metals. It was just copper. Okay. Then lead did the exact same thing in 2007, where it had been in a range for like 30, 40 years. Finally said, oh, I'm out of here. And it quadrupled in a couple quarters. And then after that lived in a new reality, at, quadrupled the price, basically, what had been the old reality. Well, silver, why was silver confined in a 50-year range Well, gold wasn't, copper wasn't, lead wasn't. Well, there's some arguments as to why. I won't get in. But once it gets out of that range, it's saying, I'm PO'd. I've been kept back. I'm not in reality. I'm going to a new reality that reflects the ongoing decay in the money unit, my relationship to gold. It's been too cheap too long, et cetera, et cetera. And it's having a tantrum. Expect that tantrum to be mostly occurred in a couple quarters. A couple quarters measured by what? We measure the spread relationship between silver and gold. That broke out of a massive basing pattern. And when that happened in 79 and happened in 2010, that's when you went berserk in both of those bull markets, where like silver tripled, quadrupled in a matter of a handful of months. We just broke out in November. So we're like a month and 3 quarters into what is the unleashing.
Silver is reasserting itself as a true monetary metal after decades of suppression. Historically, silver has traded between 3% and 6% of gold's price. Yet even after a powerful rally, it remains near just 2%, signaling continued undervaluation. In past bull markets, silver's breakout relative to gold triggered explosive moves within months, with gold potentially heading toward 8,500 or higher in an 8-fold cycle. Even a partial return of the gold-silver ratio implies dramatically higher silver prices. Similar to copper and lead breakouts after long consolidations, silver's escape from a 50-year range reflects accelerating currency debasement. This move suggests the real repricing phase has only just begun. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.